So, hello and good afternoon here from Berlin, Germany. I welcome you to today's special webinar exclusively for JFD brokers, how to trade the market opening of the US markets like a pro. Yeah, I mean, somehow we can be really happy because we are seeing the least volatile market ever. And ever. So it hasn't been a time before when trading markets were as quiet as right now. So I'm not talking about the FX markets, but I'm talking about the equity markets here. We haven't seen many times where such a huge sentiment extreme could be measured. It's not just that market is heavily selling volatility here, but also betting that there will never be a down day again, if you want, and we'll keep on making new all-time highs. So in fact, we'll have a look at my trades a little later on. So probably there's something really interesting developing in the DAX right now. As you can see, I have two positions on. It's the first one is a DAX long position, but this is a systematic approach. I'm trading every day, so that means I have no real chance to intervene here. I mean, okay, I can switch on and off the indicator, respectively the expert advisor here, but all in all, it's a systematic approach, and today it's long, so I'm already long. Nevertheless, I could imagine to probably put another order in the market when it comes here to a potential break on the upside. And the second one, as you can see here, is a gold long position, a position I put on already last week around the non-farm payroll. So this is already a 1 week position if you want. And I can also present to you here the idea behind this. But first of all, let's have a look here at the US markets. Probably we won't trade the US markets, but instead the DAX here, since I expect some bigger moves on the upside. So if we make it above 13,000, this is the question. So in the morning we had the DAX long or short, and here in this format, I'm holding every Monday and every Thursday. I made a potential long setup, a topic here, and it was a setup where we were willing to bet on a squeeze on the upside above 13,000 points. I'll give some insights on my thoughts here a little later. And this is the reason why I really want to focus a little on the European markets. You could imagine probably that it doesn't take that much. So from a fundamental perspective, economic calendar perspective, we shouldn't expect big moves to come. There's no big events to be published here. And that said, it means that probably it's just a technical reaction, and it could be that the DAX delivers bullish action here with a squeeze above 13,000, while the US equity markets don't do much at all, or we don't get to see many moves here, big volatility at all. But before we come here to the DAX, so first of all, look at the sentiment and the current extreme we're seeing here. So unfortunately, it's not that we have a chart below that to see that or what happened here once we had such an extreme optimism in the market. But it's very interesting. It's a very interesting chart. In fact, it's the investors' intelligence sentiment, bulls and bears. And currently, you can see that obviously we're trading at the highest levels since at least or around the highest levels here we've seen in the last 10 to 12 years. And in combination with this low volatility market environment, even though low volatility, something we have to put in quotation marks, I mean, at least we can see a VIX finally trading back above 10. It's not below 10 anymore. But the thing is that nevertheless, the overall volatility in the market is still very low. So the current market conditions are the least volatile market conditions, as already said, in history. I want to show you some further stats. So by the way, I highly recommend following Charlie Bilello here. He has some awesome insights really on statistics here. And the thing is, It's plenty of information, plenty of stats, but here, this is exactly the thing I wanted to show to you. That was on Tuesday already. I presented it in the morning meeting, I think in the English version too, but definitely in the German version of the morning meeting. And what we can see here is, and this hasn't changed that much, currently the average in October from 1990 till 2017, we already know that since we made this a topic, and I said that around 30% of all trading days in October are usually bigger, equal, or bigger than 1% moves on one or the other side. And so October usually is a quite volatile month. But if you look at the current market conditions, you can see that if the month ended today, here we were on Tuesday with these stats, but you can easily put yesterday on top of that and wouldn't change anything. What you can see is that if the month ends here, you have the least volatile average volatility ever recorded in October. Never before we've seen such a quiet market environment. Same thing here. The lowest average level here, if you look at the months here with the average volatility from 1990 till 2017, also October is the least volatile. If the month ended here, not sure what has to happen to push volatility higher, but all in all, so far our expectations shouldn't be that high, and that means, on the other hand, if we try, or if you want to get to see bigger moves, probably corrective move down towards here, the region around 22,400 points, 430 points, 450 points, these highs from September. Is it these the highs? Yes, it's the region of the highs. So it was a bullish opening here. This is an October candle. If you want to get to see a retest of the highs here from September, well, then we need volatility. If there's no volatility, we should be really, really careful. That is definitely true for anti-cyclical engagements here. 1 second, by the way. I have to put it that way. We have to really be really careful with a too big expectation in terms of moves on the downside. By the way, 1 sec. So I have to put it here. And I haven't adapted, by the way, the chart. So let me just guide you through how I prepare the charts on the US market opening, even though I don't see many chances to trade it today. But what you see here, those gray lines, the vertical ones, are the lines which are showing the trading range of the spot market. So meaning we have 1:30 p.m. GMT till 8 p.m. GMT here. This is the main trading hours. I'm not considering anything happening in between here from, then in this case, 10 p.m. German time, it's 8 p.m. GMT till here 1:30 p.m. GMT. I'm not considering this. This is the trading hours of the Asian markets, respectively, of the European markets. This is where main volatility can be found, and where the main volume is traded. And that's one of the reasons why I take this time out here from the U.S. markets. But this will change once we open here, then at 1:30 p.m. GMT. And so in fact, that's it. What you can see here, the green line is the low from yesterday. The red line is the high from yesterday. The blue line is the close here yesterday. And the turquoise line will be the first tick at 1:30 p.m. GMT. And yeah, that's it. So that's the preparation of the chart. The yellow line is the exponential moving average 10, which gives us the advantage. So if you're trading above it, we only trade the long side based on the open range breakout setup. If we trade below that, we only trade the short side. Next thing to mention here is that we need the volatility, no, not the volatility, the open range to be bigger than 0.2% of the current index reading. Meaning, if we are looking at 2,548 and we multiply this with 0.2%, we're getting 5.1. That means we need at least open range and high and low, a difference here from 1:30 p.m. GMT till 2:15 p.m. GMT of 5.1 points. If we don't have that, we don't have a trading setup. And this is, by the way, something which makes definitely sense, since first of all, the spread takes a crucial role here in terms of the cost of trading. So you're not paying only commission, but we also have to earn the spread. And I want to have a spread which is below 10% of the overall trading range, else it doesn't make sense. So similar, by the way, in the DAX, when I'm trading here, I need an open range of at least 25 points currently. So similar to 0.2% here. And on top of that, you try to filter out market environments which have a very, very low volatility, which show a very low volatility, since usually these are not the markets which such approaches here, like breakout trades, are performing well in. And that's usually what you want to somehow, what you try to filter out here. And yeah, so that's it on the S&P. And then we'll have a look at it a little later on. So right now, I'd really like to have a look here at the DAX and guide you through my plans respectively. Probably we'll work with a chart where you have a little and clearer picture. So let's first have a look here at the 5-minute time frame. And you can see, obviously, market conditions are horrible for breakout traders. So there are no real breakouts happening here. But if the market makes new highs, usually the market is sold aggressively again. So yesterday there was a very interesting question from someone in my morning meeting, the German version of the morning meeting in this case. And he asked, well, isn't that kind of stop fishing happening here? And I have to say, yes, I think so. What we get to see here is probably first signs of a redistribution happening. So if you look here at the 1-hour chart, you can see that the market is stabilizing here on such an elevated level quite a while now. And usually with such huge optimism in the market, it's not just US markets, but it's same thing for, in this case, the German DAX here, but also like having such a low volatility market environment. So what you usually have is market participants naturally becoming more skeptical, especially bigger traders are usually saying, hey, you know what, it's getting unattractive from a risk reward perspective here to position ourselves long in, because the market already moved aggressively over the whole month of September here. And so usually this is then a sign that for quite a while the market stabilizes on quite a high level, and then during this time the market starts to redistribute. So all those market participants who probably went long with the breakout here, or who probably went aggressively long against the 200 simple moving average here on the downside, whatever reason they might have had for positioning themselves long. The thing is that right now they probably try to somehow get rid of their positions, even though the market is about to break higher. But from a, for example, fundamental perspective here, I'm talking mainly about discretionary traders, so not automated trading strategies and that stuff. But the thing is that from a fundamental perspective, you should be really, really careful here, I think, going aggressively long, especially with the ECB in mind, probably starting to reduce their asset purchase program from January 2018 onwards. So there is not real that fuel the market probably needs to push higher, significantly higher here. And that's one of the reasons why I think that probably the market has short-term potential here to break out, even though it's very hugely extended on the upside, and something you can also see here. And then probably we see kind of a blow-off move, and then moving lower from here, probably getting to see a more volatile autumn. Then the next 1.5 months, finally we'll then probably get to see kind of year-end rally. But before that, probably the market will see a little bigger move down. I don't know what big means, but if you look at the fact that, for example, US equities haven't seen a 3% drop here for over a year now, I mean, then you usually understand that it's not just a very low volatile market environment, but everything bigger than 3% in the US equity markets, for example, is a big move. And we will definitely consider it to be big, even though it's just probably 5% or something. And so the thing is that we can easily adapt this here to the DAX. And there's this chance, I think, that we get to see probably a short spike above 13,000 points. But then I'm not sure whether this is a real sustainable move or the market drops lower from there. And we get to see some kind of blow-off move. And this is exactly what I try to trade here from an intraday perspective, or what I try to anticipate here by viewing today here the region around 12,988 points. So if we move above this level, you can see that it's just 7 points to go until we have here our current all-time high in the DAX, and then it's another 5 points, and we reach 13,000. So 13,000 is definitely a big level to watch, and this is this fact is given alone due to the fact that it's a round number. And this is something some people might not consider, but the thing is, the question usually coming to one's mind is, what does the market, what does the market move? Yes. So what's the reason for movements in the DAX? So usually it's because buying power coming in or buyers coming in, and buyers being bigger or being bigger than the sellers, or the other way around. Okay, depends. And so the thing is that you have a chance to get to see when you should expect buyers coming in, and let's put it that way, call it feeling pain. And therefore, it's always useful, I think, to have a look here at the Eurex open interest and how the market participants are positioned here from an option perspective. So what you have to see, I mean, it's huge numbers, or it's lots of numbers. But the thing is, some might say, I don't get what is useful here. But let's have a look here. So obviously, this is the index reading. So it's 30,000 points. And then here on the right column, you get to see the so-called open interest. And this is the options being open. So the interest of the market participants here, meaning that they have an interest in this case, that they want to see the DAX below 13,000 points on, in this case, next week, Friday, the 20th of October here, till 1 p.m. German time. So this is 11 p.m. GMT. And why do they want to see the market below that? Well, 1 second, I'll show this to you. Well, because option markets, and in this case, selling a call, has the following payout structure. So usually you're selling insurance in this case, and the owner of a call has the right to buy the DAX for a predefined level, which we call here the strike price. In this case, we make it 13,000 points. So that means they have the right, even if the DAX probably pushes now to, let's say, 30,500 points, they own the right to buy the DAX to 13,000 points. So that's the right they have. And now the thing is, it's not just that you can buy the right, but there must be someone who sells the right. And it's like having an insurance company. It's the same thing. So that means in case of an insurance company, we're talking about falling prices usually. So what you do is that you buy insurance just in case. Let's say you have an equity portfolio, and you say, hey, I don't want to sell my shares I have in my portfolio, but instead I want to buy insurance here. And then there needs to be someone who's selling the insurance. Now, if something bad happens to equities and equity markets crash, for example, the insurance company has to pay because you just bought an insurance and said, hey, you know what? I can sell the market at a higher price than we're currently trading at. Just imagine you're buying an insurance saying, I lose till the point of 10,000 points here in the DAX, for example, and then the market crashes to 5,000 for whatever reason. It's a financial crisis hitting the market or something. Well, you just own the right to sell the market to 10,000 points. And this is something the insurance company has then to say, okay, I'm buying your right here to sell the DAX at 10,000 points. Irrespectively, I'm not buying the right, but I'm buying the DAX when you're selling it at 10,000. And this is what you just bought. And that said, we just turned this around, and now we're talking not about the downside, but we're talking about the upside. It's just the other way around. And what you can see is that obviously this happens once the market pushes above 13,000 points, that these market participants who just sold those calls, well, they're obviously losing money once the market, probably they start to lose money somewhere around 13,050. I don't know. But the thing is, they will start to lose money once the market pushes significantly above 13,000 points. And till then, they collect the insurance, the premium here. Everything's fine. But the moment the market pushes above 13,000, well, obviously, they start to lose money. And they probably start to use to lose big here. I'm just talking about, I'm not talking about any big or complicated strategies here, like iron condors or that stuff. So I'm only talking about selling shorts, selling calls here. That's all I talk about. So we don't want to get things too complicated here, but I just want to show you why the market could feel or see some buying pressure coming in at 13,000 points. This is mainly due to the fact, since those market participants who just sold insurance here, have to buy the FDAX then, so the DAX, because this will hedge their exposure. This will hedge their short exposure here. So they are not losing any money anymore, but they're you call this delta neutral then. And this is exactly the reason why you could expect squeezes to happen on the upside, if you want. So it's very easy. It's a very rough way to put it, but some people might have wondered why usually markets tend to squeeze about a certain level. And with this in mind, and the current low volatility plus the market being very thin, and this is usually something you can also see here when looking at the DAX in this case, which what you can see is the market is dropping and is then bought back aggressively in no time. Same thing here. Same thing here. It happened yesterday. No, I'm sorry, it was on Tuesday when the market immediately pushed lower and then was bought higher or pushed higher. No one really knew what happened here. It was just a thin market environment, just volatility happening out of the case that there were not enough bids and offers in the order book, if you want. So, and this is exactly the thing in combination, which makes it very interesting to really carefully watch this level at around 12,988 points. So the moment we push above that level, there is some further squeeze potential on the upside. So now the thing is, I don't really know if it's really worth to give it a try. When I place my stop here at this level at 12,944 points. So this is exactly the open range scenario. You may recall it in the morning with the DAX long or short. So what I did was I said, well, we're trading the break here, 12,988, yes. And then we place the stop below here, the open range. Probably we can also place it another 5 to 10 points lower, because in this case, the open range was only 17 points. So if we place the stop 5 points lower, it's 22 points risk. We place it 10 points lower, it's 27 points risk. It's not a big increase here. But now the market unfortunately pushed a little lower than that. Even this is not a huge trading range we're talking about. I mean, we're talking about a little more than 40 points. This is no big deal. But all in all, I don't consider the risk reward to be attractive anymore. Nevertheless, I have a plan here, which is to say, okay, 12,988 is the entry point. And then we're working with a volatility stop here, which means we use the ATR in a 5-minute time frame to say, I don't know, give it a factor of 3 or something, or 4 in this case, working with a 20-point stop just below the entry here to at least have a stop. The thing is that it's just a volatility stop. It's not a stop we are placing because it's market structure relevant level or something like that. No, it's just a stop we place in the market based on the current volatility, and that's it. And this is exactly the plan right now. But, and this is the thing, I don't want to place the order right now because I want to avoid getting spiked in such an order here and then seeing the market drop immediately. So it's somehow depends a little on how the US markets open. And that's one of the reasons why I took out the order. So I had the order, I placed the order. That was shortly after the DAX, I'm not the DAX long short, it was after the morning meeting, the English version of the morning meeting. I placed the order, and now I took it out again and still have it on the agenda here. The thing is, that the market here, after pushing lower, then aggressively pushed higher, and that was one sign which resulted in letting me think, okay, probably we are about to see the squeeze now, and that was the reason I placed the order here with the stop back then with 20 points. But as you can see, the market didn't went through here, but instead pushed again to the lows, and now pushing back higher again, and somehow it makes the impression, if it's just a matter of time till we finally move higher here, and attack the level around 13,000 points. But right now, I'm not sure whether I shouldn't wait here for the US markets to open, and probably don't be too aggressive here, even though we can already place, or we can already open here the window and put everything in which is necessary here. So this is, by the way, the mini terminal from JFD Brokers. It's the MT4 Plus, and it's not usual to have this tool here, but it's a special from all clients it's a special for all clients of JFD Brokers here, having this terminal. You can download it from the website. I can, by the way, show it to you. Let me just place in here the buy stop, and then first of all, let's go over here to the website from JFD Brokers. If you're interested, you can easily send me an email to jklatt@jk-trading.com. You can also contact me here via Twitter, for example. It's at Jens Klatt FX. One sec. So it's here at Jens Klatt FX. Whatever. So you can easily contact me, and then I'll send to you the link then. And here you can go on the English website, and on the English website, you have trading, and there you have the platforms, and there you have the MT4 Plus, and there you can have the MetaTrader desktop and add-on version. So it's the desktop version. That's one important thing to remember here. Nevertheless, you can download it here, the MT4 Plus add-on package then. And you can see the trade terminal, depth of market, and the mini terminal. This is what I'm right now using here, but also smart lines. It's Excel RDD. So you can put this here, place this in Excel, stealth orders, tick chart trader for scalpers, sentiment trader, correlation trader, all that stuff. So it's all for free. You can easily download it, but it's, you have to have a demo of JFD Brokers here. And then you have the price here. That will be 988. You can, in this case, I'm working with 100 lots here. That has to do with the fact, so you look at the current account size I'm trading. So meaning I'm trading 270,000 euros here, meaning if I'm going for a 20-point stop here, there, and working with a, I'm not sure, by the way. Let's place here the fixed price. That definitely works. I'm not sure whether it works if I'm working once with a fixed price and then with pips here. And here I'm working. I place an order, so it's not a position I plan to hold for too long, or it's not a swing trade like the gold trade I'm having on here. It's not a real swing trade. It's more kind of a position where I planned to probably profit from kind of corrective move back towards and back above 1,300 USD per ounce. By the way, the producer price index resulted in some volatility and a slight drop here on the downside, but it's not capable of really reducing the chances of or diminishing the momentum on the upside after the Fed surprised yesterday. Well, it didn't really surprise with the outlook for inflation here. That's, by the way, something we'll have a look at a little later on. And yeah, so in fact, let's come back here first of all to the order for the DAX. So it's 1 minute left that the US markets open. I want to wait. I really want to wait. I want to avoid to position myself long in the current market environment, then see a spike on the upside here based on, for whatever reason, probably kind of imbalance in the order book in the S&P or whatever, and then being pushed into a position and the market then immediately reverses. I try to avoid this. And again, here I'm buying 100 lots, so 100 euro per point. That has to do with the reason that I'm willing to risk 2 grand on this trade, while we have to say that 2 grand on an account of 270,000 euros here, or 268,000, but with current equity it's 270. It's less than 1%, and that's something to remember here when looking at those numbers, which is probably a little fascinating to some listening to this right now, but also intimidating to some who say, well, I never considered trading 100 lots here. It's probably I'm trading something like 1 lot and risking 100 euros, or USD or whatever. But this is something you have to take in mind here. So it's always in relation to the account size you're trading. So not sure what to make of this right now. So even this is, by the way, not really fascinating here. Look at this. I mean, this is 5 points. Okay, so it's you can really see how volatile and how unspectacular the current market conditions are. So it's nothing in terms of volatility, and this is exactly the thing why. And this is, by the way, the plan why I want to work with the price target on the upside. I could imagine the market really to squeeze aggressively above 13,000 and then really being sold sharply again, just squeezing up above that level. I'm not even sure whether we will reach this take profit level here, and then just see the market drop back again. Because there's no follow through then, but it's just because of an imbalance here in the order book happening, and then the squeeze out, kind of blow off, kind of redistribution on a volume spike, whatever. And then that's the reason why I'm working with a price target here on the upside, if I trade it at all. So by the way, let's just have a look here at how the US markets open. Let's have a look here at the S&P. And by the way, this is a purely discretionary trade. So the thing is that I use my experience and my view on the market here, my research. It's not a systematic trade. Same thing for gold. We'll have a look at gold a little later on. Let's just wait another, I don't know, 5 minutes or so, and see how things develop here. You can already see the market is trading for 2 minutes right now, and the current volatility is, in this case, 1.5 points. So the low is 2,548. The low, this is the low. The high is 2,549.5. So it's 1.5 points, and showing that the market is really not that volatile, and completely different to what happened, for example, here on Tuesday, when the market came in and pushed aggressively higher. No one really knew why, but you can also see, and this is the thing, this is what I was referring to. This is something you have to have in mind when betting on such a squeeze, a potential squeeze on the upside. The market could push higher for whatever reason, probably stabilize here. I mean, this is a 50-minute candle, but then out of nothing, there's sales coming in and pushing the market lower to new daily lows. And this is something which is also and definitely an option here for the DAX here in this case. Okay, let's just place the order. I just placed it now, and then let's have a look here. You can see that it has no real meaning that I'm placing the stop 20 points lower. It's mainly due to the volatility, the current volatility. So it's a pure volatility stop. And yeah, let's just see whether we triggered on the upside or not. The main thing is, again, I'm betting on a squeeze here. So I'm not willing to take this position for the next weeks or something. So it's a pure squeeze trade if you want. And the thing is that if we really push higher, the thing is, this, by the way, is something interesting to mention here. I'll already guide you through what I'm looking at or looking for now. The thing is, or what which trading rules I live by. So the thing is, the all-time high currently is lying here at this indication at 12,996, 97 points. The thing is, this is 3 points short of the 13,000. This means the market really sees this level. So what we should expect is, if we push to new highs here, it will be a quite aggressive move for another 10 points another 10, 15 points. And this is already pushing us then above 13,000 and meaning for me that I'll trail my stop to break even. So this is, by the way, a rule I live by. It's not just for this trade, but a rule I in general live by. I know all the time what to do in my trading. That was one thing. I have the setup if I'm trading purely discretionary. So there might be other reasons, or there might be other ways of managing a stop here or the exit of a trade. For example, in the systematic approach, I'm not looking at this. It depends. Sometimes I do, sometimes I don't, but usually I don't look at it because I just wait for the market to close and then just look whether the trade shows a profit or not. So in fact, that's very stupid. Very simple but stupid. That's nothing really intelligent or nothing really what needs a lot of thinking. That's completely different in terms of my discretionary trading approach here. So there's a clear rule I live by. So I say the initial risk is 20 points, 25 points, 30 points, depends on how I place my stop. In this case, it's 20 points because of the volatility being low. I don't want to risk too much here. On the other hand, I say, well, let's just work with the volatility stop. And then I say, once the market earned my initial risk, in this case, 20, 25 points, whatever it is then, I trail my stop to break even +1. So it's +1 because of the commission to be included here. And that's in fact it then. So from there, I usually work with, or I usually aim on an intraday trend structure to develop, and I usually work with a predefined indicator like the super trend or the Donchian channel. So for example, let's have a look here at my gold trade. Now let's do it here. So this is the gold chart. The good thing about this is I still can see here the DAX and see whether it will push those 10 points on the upside or not. So what did I do? Well, one of the main reasons I went long here was because the market priced already aggressively a rate hike of the Fed. They priced it in already aggressively. And so I didn't see any big potential here for the NFPs to surprise, especially with the hurricane last month here. In fact, nevertheless, US dollar performed quite well after the release of the data, the non-farm payrolls last Friday. And that was mainly due to the fact that the average hourly earnings came in above expectation. So way above expectation. And that resulted in the market to expect that probably US inflation will pick up. And this resulted in markets expecting the Fed to hike rates, definitely to hike rates here. And this pushed the expectation here up to over 90%. So we started at 81%. And then from here, oh, by the way, I have to and top of that, one sec. I have to open a quote widget here on my screen on the other side. Okay, so I definitely don't want to be surprised here. The Fed Watch tool showed already a high expectation of markets expecting a rate hike. And that said, there was not so much further potential on the upside for a further rate hike. So that's, by the way, the same we saw last week on Friday, and was 81%. And then after the release of the data, the market pushed higher here to over 90%. And this resulted in the US dollar being really bullish, and US dollar, I'm sorry, not US dollar being up, but also gold being down immediately. But here also the thing was that was a pure sentiment-driven trade. That means I placed my order already before the NFPs because I didn't expect to get a good fill here after the release of the data. And then the market pushed against me, but my stop immediately was placed $20 lower. That had also to do with volatility playing a role here. And in fact, it was coincidence that my stop was placed here around 1,249 USD per ounce. So the entry was $20 higher, 1,269. Yeah, so I didn't have any troubles to stand here, the market dropping, trading against me. I mean, this happens. It's nothing really nice, but it happens. But my stop was never never hit here. In fact, the market never pushed aggressively lower from there, but it just drifted lower, if you want, and then immediately reversed into the weekly close. And yeah, in fact, now turned around and pushing higher. And yesterday, so now we're getting closer. We're getting closer. I'm not sure what to make of this, really. I mean, there's no dynamic coming up here. Really no dynamic. As you can see, it's horrible. It's a horrible market. So you really get no feedback at all. So this is what we get to see here right now. So the current it's 1.75, 1.75. This is the current open range of the US markets, of the S&P here. So, wow. Crazy. Okay, let's just see whether there will be such a push. I mean, if this really happens, the market moves up 4 points, then we'll definitely see the move in the DAX too, but not sure. I leave the order place. The thing is that you really can't say if this break will take place, and if it takes place, when it will take place. And that's the reason for not being surprised here, getting caught not on the wrong side, but probably not catching such a move here. Then, if it really happens, this is the thing. I really expect it to happen. Nevertheless, I don't know whether it will. So let's come back to the gold trade then. So the thing is that I went long here. And right now, I see the market moving in my direction. Took some time, again, but then it pushed higher, pushed already high here on Friday, pushed then higher on Monday, and kept on pushing, kept on pushing. And now the thing is that you can see that the market's obviously moved more than $20 in my favor. So that means right now I'm ahead 24 USD per ounce. That said, I was capable of moving my stop, trail my stop to break even already. And so nevertheless, I was already, I had a plan, I had a game plan in mind before I entered the trade, because the thing is, I mean, you can easily enter the market. You can just go long or short. Look at this. I mean, look at what we just did in the DAX. It's nothing spectacular, in fact. It's nothing. It will be kind of a breakout trade. And we just place an order and say, I want to buy new daily highs, and I see potential for a squeeze on the upside. The problem is you enter the market, and now just imagine you enter the market, but you have no clue how to exit it. And this is exactly the thing. The exit determines whether you make a profit or a loss, right? And it's not just for one trade, but it's for all trades. And at the end, on all trades, it should be clear that the average winning trade should be bigger, hopefully far bigger, than the average losing trade, because this will make you independent from your hit rate. So, but the thing is, and this is something which many traders, especially beginners, forget. They just say, "Hey, I have a great idea. Just let enter the trade." I mean, this is a great idea. Market will go up. But the thing is, now just imagine the market really moves in your direction, and it really moves in your favor, and everything's cool, and the market really moves up because you're long, or you are long, and the market moves up, and everything's fine. But then the question arises naturally: where do we want to go out of the market? Where do we want to exit the market? And so this is crucial to answer before you enter the trade. And I was aware what to do already before I entered the trade here on Friday, because I was willing to say, okay, the target is, first of all, to see the gold price then push back above 1,300 USD per ounce. That's the first thing. I definitely see the market here somehow bearish, still below 1,310, 315 USD per ounce. Because if you zoom into the chart, you can see that there's kind of relative high developing here. And you can clearly see this already on the 4-hour chart. So the thing is, let's put it that way. So you can see that here, the last relative high, really significant relative high, can be found. meaning if we push above this level, this structure of falling highs and falling lows, mostly driven here by US yields rising, in fact, and pushing back towards 2.4% from around 2% on 10-year Treasury notes. If this level is broken, this structure of falling highs and falling lows can definitely be considered to be broken. But you can already say, or you can say that this structure is broken once this level is broken here. Once we're back above 1,280, respectively, you can definitely say it here once we are now trading back above 1,290 USD per ounce. Nevertheless, I still think that the main catalyst for further bullish action is a break back above 1,310, 315. And this is exactly the crucial level. And I definitely think that the market will push to these levels and test it at least. And let's see whether we can make it above this level. Nevertheless, I still know that on the daily chart, till we make it back above this level, we are not bullish. And this is one of the reasons why I have to start to think, how can I somehow get the most out of such a trade here and get to see such a push towards this crucial level, while on the other hand, making sure that I'm at least getting some out of the market if now our direct dominator from the daily chart starts to sell again and push us back below, or towards and probably below 1,260 USD per ounce. And the way I try to achieve that, or I will achieve that, and the plan I have here is to work with something. In this case, it's not the so-called super trend indicator, but it's the Donchian channel. So let's just see. JFD Donchian. I have another one. It's DNC. I usually use this one. So it's the Donchian 10. Let's just see. Yeah, I think this is perfect. Let's work with green, red, and blue. Place them here. And what you can see is, by the way, that's something I forgot here. No, I don't want to use this one, but the moving average, for whatever reason it is in here. Let's just take it out. So, by the way, can we just, I have to show middle line? No, that's false. I don't need the middle line because what I need is just the channel itself around the market. So what you can see here on the hourly chart is, 4-hour chart in this case, is that usually I can easily, right now, trade my stop here to 1,284 USD per ounce. And that's definitely something I'm considering right now. But I'm not sure whether this is probably right now a little too aggressive, especially with the producer price index coming in above expectation and having the US inflation here tomorrow. So I will carefully watch whether and how the market reacts to potentially higher than expected CPIs here from the US. So in fact, the thing is that, oh, by the way, well, let's see. So usually you would consider this to be strong, but the thing is that the candle itself is only 7 to 8 points here, the black one, so the red one. Yeah, so let's see. Let's just see whether they will push higher. But now let's come back to the CPI. So I will carefully watch it around what happens tomorrow, but I don't want to be too aggressive with my stop management right now. I want to give the market some room to breathe. So I definitely have this a chance here in my discretionary trading approach when trading such a setup here. And then just let's see. I mean, I don't have any risk anymore, and in fact, I already covered my swap costs here, holding such a position. And then just let's see if the numbers come in. Let's say above expectation. Usually meaning that yields should somehow stabilize, probably push up a little, and pushing gold down a little. Let's see whether probably we get to see attack at this level. And then especially let's see whether really there will be some further momentum be taken on the downside, or probably the market can stabilize very fast, similar to what happened last week on Friday here around the NFPs, and then push higher. Probably we get to see a very strong close here into the weekly close and a push above 1,300 USD. So this is definitely something interesting to see here. And I will carefully watch this level. So since this is my pure technical indicator I'm using here for the exit, even though right now I'm not just placing my stop here, since I consider chances to be given that probably there will be a coincidental move here. And I'm spiked out of the long position and then seeing the market nevertheless pushing higher as expected. This is something, for example, look here, that's probably better to see. Look at this, for example. So very strong market movement here. You're getting stopped out, and then the market moves higher from here. Something similar happening here too. So market pushing higher, getting stopped out, market pushing higher. And this is exactly what I try to avoid here somehow, and why I say I carefully watch it, but I'm nevertheless not placing my stop too aggressive here right now, since there's this chance of seeing just a spike and being stopped out, and without seeing a significant move here, let's say. So yeah, that's it on gold. By the way, also something to mention definitely. Look at this. I mean, there's a divergence for me. Definitely something you don't want to see. It's nothing big, but definitely worth watching it. So it's something also you have to take in mind here. But could lead to some further, or to some short-term bearish action here. Nevertheless, it's not sad. It's just an indication that the market momentum is the gold price is losing some momentum here. So let's just see. That's just a technical thing I'm watching, but nevertheless, again, I carefully watch it, even though I'm not going too aggressive behind the market here with my stop. So yeah, and what shall I say? I mean, it's not that I'm not placing an order here. I don't want to trade, but the thing is, obviously the market has some trouble to really push here on the upside and really show whether it's willing to make a new all-time high here then in the DAX. Just let's say, see, we have only 8 minutes left, by the way. But what I will do here is I'll have a look at the questions. If you have any questions here, please enter them. Oh, really? Is this the case? Is the audio not good? That's surprising. One second. Hello. Oh, really? Is this the case? Is the audio not good? Oh, okay. I just heard it myself. I'm not sure what's the reason for that, by the way. I don't know. What could be the reason for that? Does anyone have a tip here? What I could change to make it a little better? Because I just heard it myself. It's a little noisy. Okay. Yeah, so I hope that I'm not sure if it's a connection issue because at my end everything is very stable in terms of internet and everything. So usually that shouldn't be a problem here. I just hope that I just saw the question here, respectively the remark, and I just hope that it's not the reason, or one of the reasons why we may say, okay, this is not such a cool event here. And it's not too annoying, let's say. Yeah, if you have, do you have any questions here in terms of the setup itself, or questions around whatever you're trading, setups you're currently trading, you're watching, whatever. So just feel free to ask the question here. By the way, the thing is, that's a very interesting topic. I don't know what to make out of this, that the market is such a low volatile thing right now. It's really, I just don't know what to make out of this. You mean the current long position in the DAX? It's a systematic trade. So I have an approach telling me at the morning, based on several indicators here, whether the advantage is on the long side or on the short side, and then just places the order. It's going long or it's going short. whether the indicator, whether the set of indicators tells the system to do so. And the thing is, that's really, there's no discretionary reason behind this or something. It's just because based on a huge set of data here. Now it's getting interesting. Ticking higher. It's a huge set of data, and it's like, I don't know, more than 10 years. And good, there we go. Okay, no. But the thing is, whether they get filled. Okay, I got 2 point slippage. Let's just see whether there's further momentum now on the downside. On the upside. So it's still not enough. We just need another 5 to 10 points here. And you've seen that it's really, really fast. You just get filled here. So I can already place the stop here. Oh, usually should work. Why doesn't it work? Okay, let me just do it that way. Taking out here. Really no momentum. Come on, 5 points. We just need 5 to 10 points here. Nothing more than that. Look at here. This is the key level to watch. This is the current all-time high. It's just 10 points. It's nothing. I mean, like, you could easily push these 10 points here, and that would easily trigger further upside action on the upside. So just do us this favor in the last, let's say, 5 minutes of this event here. Yeah, I don't know. This is exactly what I'm doing right now. So it's, yes, exactly. That's an expert advisor, and the price action setup is was just triggered. So that's what I do here. So I'm not sure. Did you join the event right from the beginning? Because I explained in detail here why I'll take this trade. That has usually to do with the fact that I consider the market to be what shall I say? I mean, I think we have a good chance to get to see huge squeeze on the upside if we trigger finally the level around 13,000 points. And this is exactly what we're waiting for. I mean, this is surprising to see. There's really no buying power coming in here. And the thing is, the current all-time high is at around, what did I say? 12,997. So it's 10 points from here. I see market participants having this on the agenda plus 3 points to 10 points higher, 13,000, 13,010. Meaning if we make it above this level, 10 to 15 points higher from here, then usually you should expect a big squeeze to usually happen here. But this is exactly not the case. Not one bit. So this is like, I don't know. The problem we have here is what you really need here, in fact, is you need the U.S. markets, U.S. equity markets to probably give us a little push, or some participants here. So if you have some buying power behind you, just place, I don't know, 10 lots long FTX or something like that. Could you imagine in the current market environment really to push this another 3 points or so, and then probably trigger some further orders on the upside. So yeah. What shall I say? It's really, it's ridiculous. It's really, I haven't seen something like that before. So I've been in several market conditions, big volatile market conditions, also some really low volatile market conditions like in 2014. But this is something I haven't seen before, really. It's not good for 10 points. It's not, well, don't know what to say. Yeah, so I'll do the following. I probably end this event right here. So I still have the order on, and let's just see whether we probably make the move on the upside or not. But I say let's have a look at whether the setup played out next week then here at the same time, and just have a look, and hopefully it plays out. I mean, it would be really nice to be honest. And yeah, so that's it. Yeah, that's it from my end. So I wish you happy trading. Watch your stops, and talk to you again then next week here on the special webinar around the US market opening. And so that's it from my end. Happy trading. See you next week. I look forward to it, and have a nice evening. Talk to you soon. Bye-bye.